You want people to trust their money.
This is the market that we're operating in. They need to drive their plans forward.
We need to pursue new business opportunities.
You're always better off having a fortress balance sheet.
Prudent fiscal policy can contain debt.
You're going to take less risk to get to your target now more than ever before.
Making sense of the global economy. CNBC.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
And it's time for the final trade into First Fast Money. We're going to have the guys from The Big Short also contribute their final trade. So, Vincent Daniel.
I have two, and I'm going to be quick. Fannie Mae preferreds. It's really a trade on the election. If Trump were to win, these things can go up a lot. And my trade for Guy is Jets AFC Championship.
Wow.
I hope you enjoy it.
Wow. Wow. That's out there.
Porter Collins.
All right. Well, we like to find value where there isn't value. And so we found a stock called PCT, Plastic Recycling Company, that we think we can make money and make the world a better place.
Timothy.
I like the tacked on value, and I think GM is still extreme value even after an 80% move. They're going to surprise by 30% on EBIT tomorrow because prices are still record highs here.
Along the lines of football season, 6 weeks away, Junior Sports, GE&I, NFL owns 8% of the company. They're going to have a big year.
Dan Nathan.
Yeah, if Porter's going to make volatility great again, I think you take a look at CME Group.
Interesting.
Before the show, Mel was saying, actually, it's funny, Vinny, she was saying, if 6-11 wins the AFC East, then the Jets are in the catbird seat.
Totally.
Because that's about as well as they're going to play this.
The Giants record.
I mean, and Mel is, but just so you know, her track record is excellent. Barrett Gold, Melissa Lee, comes GOLD.
Our thanks to Vincent Daniel, Porter Collins, and Danny Moses.
Good morning, everybody. This is Squawk Age on a Tuesday. I'm Martin Sung. Your headlines: Wall Street finishing in the green. Tech stocks bouncing back sharply after last week's losses, but CrowdStrike, though, plunging for the second session in a row after causing a global tech outage on Friday. NVIDIA shares popping on reports that it is working on a new AI chip for Chinese customers. Tesla and Alphabet also up sharply ahead of earnings out tomorrow. Plus, U.S. Vice President Kamala Harris edging closer to securing the Democratic nomination for president after getting endorsements from high-profile Democrats, including former House Speaker Nancy Pelosi.
Good morning, I'm Sri Jagaraja. Thanks for joining us on Squawk Box this Tuesday morning. We begin, as we always do, with the scorecard from Wall Street. All major averages finishing in the green overnight. The Nasdaq outperforming thanks to a rebound in tech shares. That's also helping the S&P break a three-day losing streak. But CrowdStrike not taking part in the rally. Shares of the cybersecurity firm sinking for the second straight session after causing one of the worst global tech outages on Friday with a faulty update on Microsoft Windows hitting 8.5 million devices. But a couple of mega-cap techs doing very well ahead of their earnings after the bell tomorrow. Tesla popping more than 5%, while Alphabet was up 2% overnight. Right, let's bring in Bertha Coombs, who's been keeping tabs on the quarterly earnings for us and has the latest numbers from MXP out after the bell. Hi, Bertha.
Hi, Sri. You know, chip stocks helped lead the tech bounce back in today's session, but after the close here, communications chip maker NXP is giving up those gains and then some. After posting mixed results, earnings of $3.20 a share, missing by a penny, while $3.13 billion in revenues was in line on the top line. Chip makers' automotive sales missed expectations, down 7% from a year ago and 4% sequentially. As a result of that weakness in autos, NXP is actually lowering its third quarter outlook. Mixed numbers as well from analytics provider IQVIA, but the company beat on the top and bottom line, driven by strength in its technology and analytics solution. That was better than expected, even as bookings in research and development came up shy of estimates, with management pointing to budget constraints among clients causing projects to be delayed. Still, IQVIA raised its outlook, and several analysts raised their price targets on the stock. Telecom provider Verizon dropping after posting $32.8 billion in revenue, which was below expectations. $1.15 a share was in line. But the weakness they saw in wireless was the cause here. The company saw upgrades for wireless equipment fall 13% from a year ago and losses of 610,000 wireless prepaid subscribers from a year ago. CEO Hans Vestberg still, though, on the call says that they do expect to have positive net consumer phone additions for the full year. NVIDIA shares gaining nearly 5%. That was part of that big rebound today we saw in chips. On a Reuters report that the chip maker is working on a version of its newest AI chip for the Chinese market that would be compliant with U.S. export controls. Now, NVIDIA is reportedly planning on working with Inspur, one of its major distribution partners in China, to launch a chip that is allegedly called B20. That would be a version of its new flagship Blackwell chip. Shipments of the B20 reportedly set to begin in the second quarter of 2025, according to the report, citing unnamed sources. Certainly looking not to lose any more market share to Huawei. Back over to you guys.
All right. Thank you, Bertha Coombs there. All right. So Vice President Kamala Harris's presidential campaign says it's raised $81 million in the first 24 hours, reporting the most money any campaign from either party has raised in a single day this year by far. Now, Harris has also been racking up support within her own Democratic Party. The latest coming from former House Speaker Nancy Pelosi, who was reportedly instrumental in urging Biden to drop his reelection bid. Now, several other Democrats have spoken out in Harris's favor, including those considered potential challengers, including Governors Gretchen Whitmer of Michigan, Gavin Newsom of California, and also Andy Beshear. Now, Harris's campaign tells Reuters that it wants to secure commitments from most Democratic delegates by this Wednesday in a bid to try and lock in a nomination before the Democratic convention starts next month on the 19th. Let's bring in Brooke May, managing partner at Evans May Wealth. She joins us live. Brooke, good to see you and appreciate your time. How are you handicapping the elections now?
Yeah, what a wild ride it's been. We're looking at both candidates and trying to figure out for our portfolios how they could be impacted. As we know right now, Trump is ahead in the polling. And when we look at stocks or industries that could do well, we think there are some that could benefit. For example, energy. We think that some deregulation there could allow it to be easier to get permits, therefore easier to drill, better earnings. Financial services, mainly big banks. Right now, they're somewhat handicapped due to higher capital requirements. And if some of those capital requirements were rolled back, that could also be accretive to earnings. All that said, we caution clients in trying to pick a sector based on a presidential candidate. The market at times defies logic. And when you look back, for example, at Trump's first term, energy did not do well. And in Biden's presidential tenure, energy did very well. The same can be said for Obama. Healthcare did very well under the Obama administration, and investors expected it to plummet. So we are looking at companies from the bottom up we want them to have competitive advantages in all environments. And we look at their free cash flow and their balance sheet in addition to their sector.
Brooke, listen, stay right there. I want to take you live. We have Vice President Kamala Harris speaking right now. Let's take a listen.
Put my record against his. As a young prosecutor, when I was in the Alameda County District Attorney's Office in California, I specialized in cases involving sexual abuse. Donald Trump was found liable by a jury for committing sexual abuse. As Attorney General of California, I took on one of our country's largest for-profit colleges and put it out of business.
Vice President Kamala Harris there on the stump pretty clearly. And if I'm not mistaken, I think she's speaking out of Delaware there. Brooke, let's continue. It's the race has gotten tighter, right? It's gotten to 60-40 now, but that 60 is still Trump. You mentioned deregulation, sectors like energy, et cetera. What about small caps?
I think that, though, they're going to be driven by the economy and interest rates more so than anything else. Small cap companies, only about 60% of those companies are profitable, which means 40% of those companies are relying heavily on debt. And higher interest rates cut into earnings. So while rates are still elevated, we think that we could start to see the first rate cut as early as September. And going into 2025, that could be accretive to small cap earnings. So that is an area where we have added some of our portfolio, increasing the allocation.
Brooke, what's your baseline on who wins control over Congress, which is what matters the most for markets? And the market has lived with divided government before. Can it continue to do so this time round if it comes to that?
Yeah, we think it's too soon. A lot can change in a few months' time. So we're not making predictions on the outcome of the election. That said, the market tends to like gridlock. If we can get a mixed government, not a lot changes, and the market doesn't like uncertainty.
It's funny, isn't it, how the politics has usurped the market narrative. And this time last week, we were talking about the favourable CPI. We were talking about the jobless claims. It feels, doesn't it, that the Fed is playing second fiddle. So is this a market that's still about the Fed, or has the politics on November the 5th injected a new source of volatility into these markets?
I do think the election has created additional volatility. That said, the market trades off of earnings, and absent some policies, for the most part, U.S. businesses figure out how to make money in all different environments. So while it is somewhat of a distraction right now to the overall economic factors at play, we do think that ultimately interest rates, the Fed, unemployment, that's what's going to drive earnings going into 2025.
So I'm going to ask you to stick your neck out here, Brooke. It'd be fair to say that gridlock, right? Market obviously likes that. If, government of Congress is sitting there arguing with each other and can't get any legislation passed, it leaves business and companies to get on with what they do best, which is making money. Would it be fair to say, though, that if there was a Republican sweep, it would be even more positive for equities?
Mm-hmm. It very well could be. Less regulation tends to favor businesses. Lower taxes tend to favor businesses. That said, we have an issue with inflation right now. And when you look at some of the protectionist policies that Trump has indicated that he would like to impose, there could be concern around, a resurgence in inflation or even a slowing economy. He's indicated that he wants to put a 10% tariff on imports, potentially 60% tariff on Chinese imports. That's going to bleed through to prices. If we are producing here domestically, wages are higher. There are some goods that we don't produce that we need to have imported, and that could mean higher prices and lead to additional inflation. I read one study that indicated that it could be as detrimental as 1.7% to GDP. So I think we have to be cautious in just assuming one party can be significantly more beneficial than another.
Yeah, let's get to earnings. We're getting into the thick of the earnings season. You've got Tesla, Alphabet reporting tonight our time, so this is going to be the beginning of the tip of the spear. I know you're penciling in about 8% earnings growth for this year. Is that going to be enough to keep this market up at these multiples? I mean, the SPX is at about 23, 24 right now.
Mm-hmm. We don't think that, the market can operate at a very high PE for a sustained period of time. That doesn't necessarily mean that we're going to have a correction. We are optimistic, though, and we think that earnings are somewhat priced to perfection. So companies need to be able to deliver on not just earnings and revenue, but also guidance. Right now, we've got Tesla and Alphabet reporting tomorrow, in addition to other big tech to follow. And we think that they'll continue to be the leadership in this market. When you look at last year, the S&P 500, 2/3 of the return came from big tech. First quarter of this year, only about 37% of the return came from big tech. So clearly, it's dominant, and we think that that will continue. But there is a broadening in the market, and we think that we're going to see more participation. We expect earnings for this quarter to be up 9% year over year. And it'll really be the first quarter, and I think 5 quarters, where we've seen positive earnings growth from companies other than big tech.
Brooke, thank you for that. And we'll get on to the small caps, which are a big part of that narrative of the rotation trade. Brooke May stays with us. We'll take another quick break here on the programme. We'll leave you with a look at the biggest gainers on the NASDAQ overnight. The index settling 1.5% higher. We'll be back in 2 minutes.
Money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report, CNBC.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers. Weekdays, CNBC. Tiny homes.
Welcome to my tiny house in Atlanta, Georgia.
One woman makes big money with a very little house.
Pretty spacious, honestly.
Plus the Big Apple's version of living little.
My 95 square foot New York City apartment.
And downsizing to unlock a better life by the beach.
No regrets about moving into a tiny house. There's no room for excess or unnecessary objects.
That's all next on Unlocked.